Welcome to Penrose Learning, where we make understanding easy.
In this video, I will explain how to avoid inheritance tax. Start by listing all assets, beneficiaries, and outstanding liabilities so you know what is taxable. Next, review available exemptions and gifting strategies that can shift value outside the estate. Consider lifetime trusts and beneficiary designations, and consult a qualified advisor to structure transfers correctly. Keep clear records and update plans regularly to reflect changes in assets or family circumstances. Begin with the annual gifting strategy to reduce estate size by transferring exempt amounts to heirs each year. Consider irrevocable trusts to shelter appreciating assets away from your taxable estate while retaining useful benefits for beneficiaries. Use an ILIT for life insurance proceeds so the payout is not included in your estate and can cover tax liabilities. Always coordinate beneficiary designations and titling to match your overall plan. If you're finding this helpful, please subscribe and like to support more clear planning tips. Quick recommendation: make meal prep easy with leak-proof containers that keep salads and dressings separate so you can focus on planning without kitchen mess. They're perfect for busy days when you're organizing documents or meeting advisors, and they save cleanup time. Check the description for the product link and other deals. Now let's get back to the video. Watch out for common mistakes like making transfers that look permanent but are still under your control, which can create tax problems. Keep beneficiary designations current so assets pass as intended and avoid probate surprises that increase tax exposure. Be mindful of state-level inheritance and estate rules that may differ from federal law, and coordinate any plan with local requirements to prevent costly unintended consequences.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.